And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. It is Tuesday, November the 2nd. My name is John. Thanks for trusting me with your time. Very cold morning. Winter is coming. November already. Still can't get over that. Man, it seems the older I get, the faster time goes. Unless, of course, I have risk on, and then time stops. Anyways, as always, context, risk management, and patience are always on our mind. Congratulations, Spencer. See you got your funded account. Patience, patience, patience. Take your time. Build slowly. It's okay. You're going to be trading for the rest of your life. You'll so trade for the rest of your life. As always, looking at economic numbers this morning, nothing really to worry about. 7:55, the Red Book came out. Not very impactful, of course. But the FOMC meeting does start today. We've got U.S. equities flattening out after record-setting days yesterday. Record-setting closes, but the overnight put in the all-time high. What do we say about that? So apparently the equities will be waiting for guidance from the FOMC meeting, which is due out tomorrow. 1 p.m. is the announcement for any changes. And then 1:30, the Fed chair announcement. I got to talk to them about that. They may have to move that time because it steps on our group coaching, which will start at 1:05 tomorrow. I just put in the link so you can register for it. Hope you'll join. And hope we have some good questions. I think we always get some good questions emailed in from Fred and sometimes from others. Fred's questions are always excellent, important for everybody to have a chance to kind of sift through, and I always enjoy them. So, and I enjoy all of your questions. So please make sure and join me tomorrow, 1:05 for group coaching. Other things going on, I guess Google has plans to leave China, citing increasingly challenging business and legal environment. I find that to be kind of interesting. ConocoPhillips has beaten profit expectations on higher crude prices. As far as earnings due out this morning, Pfizer beating expectations as would be expected. ConocoPhillips, of course, BP, mixed data from there. Estee Lauder. Every time I see Estee Lauder on this list, it just, it's a makeup company, but it's a $117 billion market cap company. They beat expectations on both today as well. After the close, we're waiting for T-Mobile, Amgen, and Activision. Just picked out a few. It's a long list. We are in the throes of earnings season right now. So, as usual, make sure you like, share, comment, question, feedback, and heckle at will. Subscribe to our YouTube channel so you can get notified when we do go live. VIX flat this morning, 1643, much like the equities. Dollar index up slightly in the upper quarter of the year range at 93.93, and the 10-year yield dead steady after off its close yesterday at 1.5%. 1.56% to be a little bit more accurate. Excuse me. I've been up since 5:30 and I still feel like I'm getting the sleep out of my eyes. Good morning, Charles, Brian, Theo. Trading times for natural gas. I'm judging it just by volume. I'm looking at it at pretty much the same as crude oil, 8 a.m. to 1:30 p.m., and that's in Central Time. Good morning, Felix, Daniel. Robert Kennedy is with us this morning. Welcome, Robert. Drew, good morning. Frederico, Harry, my brother Rick is with us this morning. Good morning, Rick. Vince, good morning. Harry, too, is present. Tanya, good morning. Good to see you, Tanya. Hope things are going well for you. Spencer, finally got the funded account. Repeating affirmations about patience. Most of the time, the most profitable thing you can do is nothing at all. Very true. Very true. Very wise words, Spencer. I think you're going to do just fine. Isaac, good morning. Clem, good morning. Ed Nelson, good morning. Frederico, the Ministry of Commerce of China has advised their citizens to stockpile some necessities for living. That's kind of scary. That's kind of scary. Thanks for letting us know about that, Frederico. Alfred, Jason, Peter. Yes, you may say good evening. I know you are over in Uganda, I think. It's good to see you, Peter, as always. Angelina, Wen, Ryan, Robert, Trading Research, Chris, Robert S., Nelson Benitez, Ryan Williamson. There's the link for group coaching. Trading Research, PK, good morning. Darn these moving clocks, yeah. I guess Saturday into Sunday, we are doing that here in the places that change their clocks in the U.S. next Saturday. Equities are putting me to sleep. Good as gold is the market for me today. We'll take a look at that. I've got some thoughts on gold, and it seems like almost a random walk. Good morning, France. Columbus, good morning. Patrick. Ophelia from Nigeria. What do you think of Tesla now, all-time high? They're making it into the trillion-dollar company. Well, what are you going to do? I mean, it's kind of rich to buy into now. What do we wait for a split and see if we can't pile in after that? It certainly seems the company is doing well. It's never made the money that it seems to be worth. There's another company was looking at it today. Amazon is buying. It's a truck company, an electric truck company. I can't think of the name of it right now. That may create a little bit of competition for our dear Tesla. Spencer broke out of the 3-day. Natural gas broke out of a 3-day downtrend last night. It's been losing open interest the whole way down. What's that tell us, Spencer? The auction process may be tiring to the downside. And again, we'll be looking at that in the charts this morning. Jacori, good morning. Stephen. Hey, Greg, good morning. And Rob T. All right. We got a good crew here. If you're new to the market forecast, welcome. We're happy to see you. And we're going to jump into the charts right now, as usual. In no particular order, just going from left to right. We start with the daily and crude oil. And here we are. Boy, look at that uptrend. Just straight bottom left corner to top right corner. Open interest continues to fall as some of this balance that we're currently in remains. We discussed this yesterday. We've got, the markets go, they go directional, they rest. They go directional, they rest. I like to call this when the auctioneer is pandering. We got a robust auction to the upside, but it takes little breaks along the way when people ponder how they're gonna treat the upside auction. We're still in an upside auction. The upside structure is still good. I'm going to be looking for opportunities to buy weakness if I can get them. There's 3 levels in longer time frame that I'm going to be focusing on today. Weekly kickoff high, weekly kickoff low, and this trend line, which, we've got quite a few points of contact. It's not perfect, but it seems to be supporting our upside move here. We are waiting for the API this afternoon, the EIA tomorrow, and the FOMC tomorrow, and OPEC Plus on Thursday with any possible changes they're going to make to the supply side, which is always and still is in question. Take a look at the 30-minute chart. All right, so overnight, we didn't really have much overnight inventory until just before 6 o'clock here. We got up. We probably got a little bit too short in the hole here. We are reconciling those shorts right back to settlement, right back to range, right back to value from yesterday. So I'm going to say if we're going to open inside of yesterday's range, I'm going to try and, again, stay pretty patient. And I'm going to be looking for opportunities as the day goes on. Again, my focus is going to be on weekly kickoff high. This was a naked point of control that we have since checked. I'll have to take that off. We've got another one down here, but we are waiting for information and opening inside range, and now back inside value gives us the opportunity to say, okay, let's see how things play out a little bit before we start to get involved. There's little change in the perception of value from the close yesterday, from the range from yesterday. Knowing all the information we have due out, I'm going to, again, suggest staying patient. It's always a good idea. All right. Ocean Blue, you can trade the combine this week with the FOMC reports. If you're in step 2 or a funded account, you can't trade into the FOMC release on Wednesday. We want you flat for when that comes out because the knee jerks can be really scary on that. But yeah, you can trade this week. Good morning, Terrence David K. New to the new trading combine. Welcome, David. Glad you're here. Welcome from California. It's early out there. Thanks for joining us today. Just touch settlement to the tick, as you were saying. Yep. So again, there's many visuals. It's in short time frame control. We can see that by the range we've created on the daily chart. We've got lots to look at. We've got weekly kickoff high. We've got value high from yesterday. We've got settlement and point of control from yesterday. We've got the low end of yesterday's range. We've got settlement from the day before. We've got an unfinished point of control from yesterday. We've got some swing lows. We got value low. We got overnight low. There's lots of things to look at. So stay patient. Make sure that you are make sure that you are patient, as always. I can't say that enough, and I think I say it too much. Right. The E-mini S&Ps. We've got a drop in open interest yesterday when we were just coming off an overnight extended trading hour all-time high. We lost 10,000 in open interest yesterday. Volume yesterday on all-time highs. I'm going to add that right now. I've made some changes to the charts, and I want to make sure that I get caught up on things here. So yesterday's New York Stock Exchange volume was off about 7%. We put in new highs and we cut off volume. That's not necessarily good news for an upside auction. Caveat to that, the equities don't necessarily need big volume to continue to push to the downside. All the equities need are a bunch of short time frame shorts piling in and then getting stuck. I'm not suggesting that that's exactly what's happening now. We've got losing open interest. We got loss in open interest. So I think what we saw yesterday was, a new all-time high, but in a market that is cautious, that is entering into a protection zone. I think the bigger traders are basically working to hedge themselves in case anything wacky does happen on Wednesday. And I think the kind of long shadows and short body of yesterday's daily candle represents that pretty well. And now we've got an inside extended trading hour range today. Weekly kickoff high seems to be magnetic because it's here. Sometimes these things move. Seems to be magnetic. We did close above it yesterday. We're kind of holding up above it. It seems more magnetic than supportive or resistant. Take a look at the 30-minute chart. Okay, so no spike yesterday. That's new. Seems we've been having late spikes a lot lately. Sometimes they work very well. FOMC starts today. The release of any changes in the chair presser is tomorrow. You can trade, Dante. Yes, you can. If you're in step 2 or a funded account, you cannot hold through the release at 1 o'clock tomorrow. A minute before and a minute after. Let the market do its knee jerk and see if you can find opportunities. So yes, you can trade. You can trade today. You can trade tomorrow. Just don't be holding positions when the release comes out. Wait a minute. Get out a minute before. Get back in a minute afterwards. I've traded a lot of important big releases in my day, and I've held some big positions, and I've had some wildly successful days and some really horrible days. And if I add up the losses and wins of all of that consternation and wear on my heart and grayness in my hair, I'm about even. So I don't play those situations. I may respond to some of the knee-jerk reactions, and I will always be looking for opportunity, but I don't hold positions into them because it's instant win, instant loss, and it's a coin flip. Ryan, I believe that's correct. Double check the rules on the website just to make sure. You're welcome, Fred. Okay. So no spike, no gap, no overnight inventory. All-time high in the extended hour trading session. We got to remember that. We know that markets don't like to leave all-time highs or recent highs or lows in extended trading hours. The bigger time frame likes to participate in those events, those earmarks, if you will. So with no spike, no gap, no overnight inventory, and an inside trading hour range, what's that say to me? It says patience. Mondays are usually slow starts for me. It wasn't until almost the end of the day when I finally took a trade and had a decent day. Took all that waiting and pondering and thinking, what am I doing? I should be trading. I'm a trader. I should be trading, and nothing could be further from the truth. Don't ever put yourself in that situation. If you're not seeing things, if you're not seeing opportunity, if the risks seem too great or you don't get your level, don't worry. Another opportunity's coming. All right. So let's move on from the E-mini S&Ps. It's a rather uneventful overnight situation. However, the NASDAQ has a different situation. Same, but different. All-time high in the extended trading hour session. We lost 3,000 in open interest yesterday, indicating positioning and hedging for tomorrow. The loss of the open interest is not encouraging to the upside. The loss of volume, not encouraging to the upside. But again, that same caveat applies. Equities don't need volume and open interest just to continue to rally. We've got a smaller volume over smaller range. Do you think they're expecting something? Do you think maybe? Take a look at the 30-minute. We do have a late spike, and we are in it or above it. So here's our late spike in the NASDAQ from yesterday. Probably some earnings coming out. We're looking at the base of the late spike as last week's high, the overnight low. We've got settlement up here at 15,894 and a quarter, and what are we looking at? We're not looking at much. We're not looking at a big change in the perception of value in the overnight. We know the market is waiting for new information. Now we have an important nuance. This late spike opening in it or above it marks acceptance of higher pricing. We also know that we don't like leaving all-time highs in the overnight session, which we did in the NASDAQ yesterday as well. So, conflicting information, volume and open interest falling off, the nuance of the late spike and the overnight high being left in the overnight session. I would say there's a probability, as long as we can stay above our overnight low slash base of the late spike here, I think we've got a pretty good chance of coming up and taking out night before last's overnight all-time high. If we can't hold this, we go back into value. We could certainly pull back down into value. Now, some of the high volume nodes for the NASDAQ today, we're kind of at one here. Okay, so 15,860. We've got point of control from yesterday, which is the highest volume node, 15,820. We tested back to the point of control from yesterday. The base of the late spike actually was, a little deep down through it, but ended up being supportive to continue the move to the upside. There's also the value low from yesterday, which is, relatively close to a couple of higher volume nodes. So I'm going to choose value low from yesterday as one of those important kind of higher volume nodes if the market even approaches it, 15,682. So we've got a couple of higher volume nodes to kind of be focusing on. No high volume nodes above. We're at all-time highs. All right, Charles, I'm glad that sounds like you were able to take advantage of those levels we discussed yesterday. And that makes me, of course, happy. Gold. What are we going to do with this market? Longer time frame balance, short time frame control. The short time frame upside has been at risk of changing. We had a close below it. We had a close back above it. We're kind of holding on to that level. Volume and open interest are flipping from day to day. We added 6,400 yesterday on low volume. We had higher volume the day before, and I think we lost open interest. So from day to day, open interest and volume are kind of flipping back and forth and not necessarily going anywhere or giving us any really decent information to use. So I'm kind of looking at this as a very short time frame market. So we're going to be looking at short time frame levels. Take a look at the 30-minute chart. There are levels aplenty for traders to focus on and to push price to, but it almost seems like it's a random walk. It almost seems like there isn't all that much great information or directional information to look for. So, my targets are usually going to be weekly kickoff high, weekly kickoff low. That's pretty far away from where we are now. We're centrally located. Do you think that we've got some traders hedging and positioning themselves for tomorrow? We don't know what's going to happen. It might be a big goose egg. We have no idea. As far as, important levels, well, we're inside range. We're inside value. We don't have a gap. We've got very little change in the perception of value. The first two levels that I would look for this market to try and check to would be the point of control from Friday and the point of control from yesterday, which it very well might. But I think it's a coin flip as to which one it's going to head to first. I don't see that there's any real good directional or usable information in the neighborhood here. So I'm kind of backburnering gold, at least for now. Anything can change. Something can change at any moment, but without any kind of change between now and tomorrow, it's a sit and watch product for me unless there's something that changes. Take a look at the euro. It's in a very similar situation, which makes sense. We're getting about a month of balance here. We checked it. We checked the high of weekly kickoff on Friday. Checked the low of kickoff yesterday. Both were resistant and supportive, respectively. Now we're right in the middle. We lost 3,200 in open interest off that low yesterday. Medium time frame balance beat remains. The landscape is very similar to what we've got going in gold. Volume and open interest are also kind of flip-flopping daily. We did have a late spike yesterday. Let's take a look at it. This might provide us at least an idea of some kind of opportunity. So here's yesterday's range. Here's the late spike that occurred at the end of the day yesterday. Settlement was all the way up here. We closed right at the high, 116.16. You're going to put that on your charts. And we did open, and we have remained inside the late spike from yesterday. So an excursion outside of yesterday's range above this would indicate, which is what we're thinking now, because we did open and we are maintaining time in the late spike, that the market is beginning to accept higher prices. Well, we've got a point of control right here that I haven't put on here yet. Let's do that. I'm going to make it green. So there's a naked point of control, last week's high, and weekly kickoff high. No real other targets other than weekly kickoff low and last week's low down below. So I'm going to go with, if I'm going to do anything, as long as we hold the base of the late spike, I'm looking for opportunities for this market to move higher. Another naked point of control right here. Let me pop that on. Pretty good probability, as close as that is, of it to be checked. Let's move on. 10-year. Now, you know that this market is being hedged very, very, very deeply. Lots of jockeying for position and a lot of hedging going on. Volume dies. Look at it yesterday. Lost 6,200 in open interest, but that's not a big deal in the 10-year. Price central, waiting news. Central from last week's range. Central and weekly kickoff levels. It's random. It's a random walk. Look at the 30-minute chart. Maybe a few overnight longs here, but with this consolidation, that tends to kind of eat up the overnight longs. The longer there's this consolidation, the more likely a lot of those longs have already liquidated or gotten into different positions. We don't have a gap. There's not a lot to look at until we get all up to last week's high. A little bit more to look at down below. We've got yesterday's point of control, naked point of control just below last week's low. But again, I'm not looking for anything big to happen. Of course, anything can and will happen. Usually, if there's some sort of headline news, we don't know what's going to happen in Washington today. So I'm just kind of cautiously biding time in many of these markets because of where we are, what we're facing, what we're looking at. Here's nat gas. 2-day balance. Well, 1 day here. Today we're inside extended trading hour range, so I'm calling this a 1-day area of balance. Last week's low seems pivotal. We're fighting with it now. I'm going to be using balance rules because it seems like something's missing here. It does. There's a day missing here. Where's the 29th? Well, that's fabulous. Let's look on the 30-minute chart. Inside extended trading hours from yesterday. So there's the 29th. Last week's low. Inside yesterday. This is strange. There's something not right with these. Not right with these charts, but this is yesterday's profile. Settlement is correct. $5.18. Opening with a gap. Closing the gap. Overnight longs. It's consolidating. So it's almost like what we just looked at. So if we can't re-accept inside the range from yesterday or the day before, I'm looking for this market to resume its move back to the upside. We've opened with the gap. The high of the gap has shown some degree of support. Again, patience. Patience pays. All right, so I've lost my ability to see the chat for some reason. I'm hoping that I'm still live here. It appears to be. Yeah, Fred, my pleasure about the group coaching yesterday. It looks like I think we're still on here. Ocean Blue, thank you very much. I really appreciate the thanks and the love. Yeah, Fred's been with us for a long time, and yeah, I really appreciate his questioning, his thirst for knowledge, and he's a good man, and I always appreciate when he's around, and I appreciate, of course, all of you. We're going to take our deep breath. We're getting a little bit long-winded here. We got about 10 minutes before the equity open. See you. Not positive that we're going to be able to put out the coach's playbook today. We've got a company meeting that may squash on that a little bit. But we're talking about, even if it's not today, it'll be tomorrow, and it'll be on YouTube for any time you want to watch. But we're going to be talking about the importance of maximizing your strengths versus diminishing your weaknesses. I think a lot of folks tend to focus on the weaknesses that we all hear about and we know we have as traders, but do we really focus enough on maximizing our strengths? It's going to be a good one for us. So take a deep breath. Looking forward to seeing you either this afternoon or later on this morning for the coach's playbook, or tomorrow morning for the market forecast. Dan, of course, will be with you for the market recap, I believe, today. And other than that, let's get out there. Let's I think it's going to be a hurry up and wait kind of day. If you miss an opportunity, there's another one coming down the pipe. Just don't worry about it. Be patient. It's a weird week this week with everything going on in the FOMC meeting. So we are going to get down to the pit. See you there. Trade well today. Get out there. Profit. Make some money today and live to trade another day. That's one of our mottos here is always trade for tomorrow. So